Hey, what's up guys, John here. There is a rumor on Twitter that UBS is on the brink of collapse. Now, UBS acquired Credit Suisse about 6 months ago
to stabilize the global financial system.
Banking giant UBS agreeing to buy rival bank Credit Suisse for $3.2 billion.
Now, UBS, this letter that's being sent out and being shown could be real, could be fake. But there's millions of views around this. And the head of UBS came out just a couple days ago talking about the collapse of UBS. You have to ask yourself, what's real? What's not? What should we look at, right? You have 20,000 employees just in the banking sector in America that were quietly fired in 2023. It's concerning.
Big banks have been quietly cutting jobs.
You look at these 5 banks, they've cut about 20,000 jobs so far this year.
You have Signature Bank, you have First Republic, you have Credit Suisse, you have PacWest getting acquired by Bank of California, all in 2023. And you start to look and connect the dots here. You have to ask yourself, is the banking system as stable as they say it is? Is it? Well, you have Janet Yellen coming out saying, you know what, we need to have more protections to prevent bank runs. You have Switzerland coming out saying the same exact thing, that they want to do all these protections for consumers. They can't get their money out, but they want to protect the consumer from the banking system collapsing. You have to ask yourself, what's going to happen next, right? Because this feels like we're walking into the climax. This isn't the, we haven't seen the worst of it yet. I'm going to break it down for you in this video, give you a clear picture of what's going on here. Please hit the like button. When you hit the like button, YouTube will share this content to educate other people about what's really going on in America. And if you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description. Just below this video, schedule a free strategy session. Take a look at this. So, UBS head believes the bank is not too big to fail, but in the case of rescue, he has a clear idea of how things should go down. This came out November 23rd, so 2 days ago. Sergio Armonti believes UBS can be two things at the same time. It is already undisputed center of Switzerland Financial Center, yet it is also not so large that it is apt to take the banking hub and the domestic economy down should it collapse. According to him, it is currently one of the safest systems relevant global institutions in the world, he told attendees at Swiss Risk Association event, which the news service Reuters attended. In the unlikely case that things go down, the bank has enough of a cushion before resolution has to even be considered, and it is very improbable that taxpayers will ever bear the loss. Now look at this. Should something happen, Emirati indicates he would prefer a private buyer as a solution. Of course, this would likely entail international buyers, Reuters reported. The statements are likely to prompt a controversy domestically, given the speculation surrounding Credit Suisse before UBS government prompted rescue in March. At that time, there are discussions over the possible sale to a foreign buyer. Now, digital bank runs. Emirati, and this digital bank run, by the way, you have Janet Yellen, talking heavily about, Signature Bank and Silicon Valley Bank and all these bank problems that we've had here in America being instigated due to social media, being able to quickly spread where depositors are ripping their money out of the banks, it being a massive problem. So they're talking about, issuing these regulations and changes to our ability to access our own funds. When you have what Switzerland is now talking about, which is the same exact thing. So here, a general overhaul of the country's banking regulations. Since the failure of Silicon Valley Bank, Signature Bank, Credit Suisse, financial regulators around the world have been considering how to avoid a new uncontrolled bank run. In the context, it was only a matter of time before the Swiss authorities met with the relevant institutions to discuss how to implement new regulatory measures to reduce the risk of yet another massive withdrawal of deposits. From the article published by Reuters, it appears that the talks between Swiss authorities and the country's major banks, including UBS, are part of a broader review of the country's bank runs and could primarily target wealthy clients of Swiss banks. This is mainly due to their bank's specialization in wealth management, which means that they tend to have a higher concentration of deposits than some of their commercial banking competitors. Negotiations are at an early stage, but according to sources consulted by the UK-based news agency, among the measures being discussed is the option of staggering a large part of deposit withdrawals over a larger period, the possibility of imposing fees on certain amounts of withdrawals, is also under consideration. On the other hand, a high interest rate is set to be rewarded to customers to keep their savings for a longer period. In any case, a representative of the Finance Ministry said that the issue of mass deposit withdrawals is part of an overall assessment of regulatory framework that banks that are too big to fail in Switzerland, and that the government plans to publish a report on the outcome of the talks in spring next year. So you start to look at this. They mentioned UBS. I didn't mention this on the search. It just says Switzerland new measures to prevent bank runs, November 14th, 11 days ago. So look at what is happening with this UBS bailout. So who bails UBS when UBS is 3x the size of Credit Suisse? Credit Suisse, total assets $550 billion. UBS, $1,645 billion. This is the letter. 961,000 views here. And then here, 187,000 views. The letter reads, and again, I'm not sure if this letter is authentic, if this is not authentic, but this is what's going around. We apologize for the delay in processing your deposit withdrawal request. Due to unforeseen liquidity challenges at UBS branch located at, we regret to inform you that we are currently unable to fulfill your request. We understand the urgency of the financial need and sincerely apologize for any inconvenience caused. Our team is actively working to resolve the issue as quickly as possible. We appreciate your patience during this time. Please be assured that we take your concerns seriously as we are committed to finding a satisfactory resolution. For any assistance or inquiries, you can reach out to us. Once again, we apologize for any inconvenience. So you have to ask yourself, America's bank sitting on $1.7 trillion in unrealized losses, March, 6 months ago, right? You have to ask yourself, how bad are things really? How bad are things really? 2 weeks ago, November 9th, Bank of America, Chase, U.S. bank systems down. People couldn't access direct deposits. Remember that? Now we have big banks quietly cutting, 20,000 jobs. You have all these things. Citibank, they're now committing to firing 10% of their staff, of 240,000 jobs, so 24,000 jobs right there. And then we have to ask yourself, how do banks stay in business? Well, they take depositors' funds and they lend it out. And they lend it on, cars, houses, businesses, commercial real estate, loans, business loans, personal loans, right? They lend out money. Well, what happens when a lot of those loans go bad and they have no money to lend? Well, big problems happen, right? Well, when you have a situation where in 2021, August 2021, they had $2.1 trillion in excess savings. They were able to lend out tons and tons and tons of money. Super easy to get a loan. Then, right now, it says that they have $190 billion by June. So they're going to have $190 billion by June. That means that if there's 26 months that have passed since that August 2021 date, right? August 2021, 26 months means that they're burning $80 billion per month, which means they're basically out of money now, right? So they're walking into the holiday season, student loans due, a lot of problems. Average loan, $503 a month. 43.5 million Americans owe this money. You're going to start seeing more and more and more problems, and I think that's why Janet Yellen came out in June saying, you know what, prepare for more, bank mergers. She looks very compassionate for the American people. She wants to help them, right? So you get ready for this. I think something very, very big is happening. So I'm not sure of the authenticity of this letter. I want to be very, very clear about this. I'm not sure about the authenticity of this letter, but it doesn't make much sense that the head of UBS would come out 2 days ago and make these statements. So it's very, very concerning. I'm wondering, what do you think? Do you think that this is legitimate, that UBS is in significant financial problems? Do you think that they are going to start to implement these restrictions and changes to prevent bank runs and people accessing their funds? I think we're going to witness one thing for sure, regardless of what happens here. We're going to witness banks getting much more skittish. They're going to get much more concerned about the loans in which they issue and doing business with certain individuals. They're going to be very, very cautious going into the future because they issued a lot of bad loans that are going to end up coming back to the banks with significant loan losses. And the only way in which they stay in business is they need to lend money into existence. And if they don't have consumers that have the cash, the credit, and the ability to pay back, they're not going to be able to lend. So what's going to happen? We're going to be walking into a wave of consolidation across banks here in America and overseas. I think this is going to be one of the greatest rug pulls in American history and probably in the world is going to be in the banking sector, in the finance sector. We're walking into this and it's coming in like a speed train. Drop below. Let's have a conversation about this. Do you think we're walking into something significant in 2024, in 2025? I would bet so. I think we're walking into something unlike anything we've ever seen before. Something far greater than 2008, bigger than the dot-com bubble, bigger than what we've seen in the 1990s real estate crash, all combined and buttoned up with a bow and given to the American people. 2024, 2025, big problems coming, massive opportunities coming to the smart, the savvy, and the prepared that have options. Options is wealth in this new normal. Drop below, let's have a conversation. And if you'd like to fix your credit, we'd love to help you at my company, greatcreditfast.com. That's greatcreditfast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to greatcreditfast.com. Schedule a free strategy session below in the description. Click the link and schedule a call. As banks tighten up, they're going to really be careful on who they lend money to. You want to position yourself and ask yourself this question. If you were a bank, would you lend you money? If your credit score is bad or you're viewed as subprime or someone that has a checkered history of paying back, you want to square that away. You want to take care of your credit. We'd love to help you and give you a free strategy session at greatcreditfast.com. Catch you in the next video.